we're in serious trouble. And when the bond markets collapse, so does the stock market collapse. I mean, it's going to be massive.
This will be the largest transfer of wealth we will ever see in the history of money.
And today we're talking about real money, not this garbage here, not this fake paper stuff. I just don't know why people work for this garbage. This is toilet paper. Why do people hang with the toilet paper? I don't know. Our program today is to kind of break people away from the idea that this is money. But anyway, they printed more money, and we never heard about it just recently. They printed so much more of this trash just to prevent the banks, because it was Silvergate and Silverado's banks were going down. They had to do something. So they basically took T-bills where everybody thinks are safe, and they basically liquefied it. And now they're flooding the system with more of this stuff. And the reason I'm on this point here is because I get into a lot of fights with friends and family and people like that, and they want to hang on to this. They want to save this at the same time the Fed and the Treasury are printing trillions. And we're hanging on to it. But I am Japanese, but also the Japanese are number one savers in the world. And what do they save? Yen and T-bills, US T-bills. I mean, Japanese maybe get admitted to Harvard and Princeton and Yale, but they don't know jack about money because they save yen. I would never save yen. I wouldn't even use yen as toilet paper. That's how bad it is. But the Japanese proudly save it, and the government prints trillions of it. And my friends would come up and they'd say, "You saying buy silver?" I said, "Yeah, buy it." "Did you buy any?" "No." So we were telling the world to buy silver. I think silver was $2 or something. And today, $24. This dollar has come down. And these guys are still saving this toilet paper or yen or pesos or euro. What do you think of my comment? Would you save the yen?
No, I wouldn't save the US dollar. I wouldn't save the yen. I wouldn't save any paper currency at this point. They've been printing money so fast. It seems to get worse and worse every year. And the dollar's going nowhere but down.
No. And it's getting worse. I mean, just recently, within the last 6 months, when Silverado and Silvergate, where those banks were, when they tried to stop inflation by raising interest rates, the bond markets collapsed. And when the bond markets collapse, so does the stock market collapse. And we have a baby boom generation, my generation, we're in serious trouble. Serious trouble because they're saving paper, stocks, bonds, mutual funds, ETFs, things I wouldn't touch. You can do it if you like. I don't have to because I own the physical asset. I own the mines. I own businesses. I'm an entrepreneur. But so many people are being set up.
Yeah, they are being set up. And really, Robert, I look for tipping points. And the tipping point, when they really started printing up a lot of money, goes all the way back to year 2000 when Alan Greenspan, after the dot-com bubble, just started printing money like crazy. People don't understand, but we had $5.6 trillion worth of debt in 2000, on balance sheet debt. And now we're at $33 trillion. What happens to real money when that happens? If you go back to 2000, the gold market was trading at $275 an ounce. Silver was about $3.50 an ounce. We've added so much paper money, it's making the value of tangible assets worth much, much more. That's what people have to get wrapped around in their head. Every time they print more of this paper money, that becomes worth less and the tangible assets become worth more.
And right now, the next hot new thing is that AI, artificial intelligence. I did a talk at my friend Ken McElroy's event. Somebody said, "What is AI?" I said, "A college degree. You don't learn anything about money." That was my poor dad, PhD. And I kept saying PhD is for poor, helpless, and desperate. And then you go see a financial planner who's only rewarded by selling you paper. Financial planner will not recommend gold or silver because they got no commission from it. Is that correct?
They don't want to recommend that, which is really sad because if we go back to 2000, I always use this example and some people agree with the time period, some people don't, but I like using long-term horizons. In 2000, if you would have invested $100,000 in the stock market, forgetting about dividends here for a second, today that'd be worth about $320,000. If you would have invested $80,000 in the stock market and $20,000 in the gold market, that's worth $385,000. You picked up $65,000 extra dollars in your bank account over that time period by investing just 20% in precious metals. Why? Because they print up more and more of the paper money, the fake money, and the tangible assets become worth more and more. Look, you've lived it. You started this a long time ago with your education about real estate and precious metals. Those are tangible assets that have appreciated in value. You would have done very well by owning those and gotten away from that paper dollar.
Right. I'll just say I don't trust anything they can print. It's that simple. I own oil. I don't own, Standard Oil or Exxon. I own the oil in the ground. I don't want anything they can print, but that's me. But that's what Rich Dad stands for. We don't recommend going to college and getting a college degree, then your PhD, and then look for a job. Oh my God. Especially today, because, I've been listening to records and what's happening with AI. Unemployment's about to go through the roof. Records is calling for tens of thousands of people to be laid off simply because the economy is sliding into a recession, possible depression. And all the manufacturing companies throughout Europe and all that, they don't have jobs. They don't have any work coming in. And China, China didn't save the economy. And people are still going to school, looking for a job, saving money, putting the money in a 401k full of 401ks and IRAs and all this other mutual funds and ETFs. Anything you can print, I don't want to trust, but that's me. I'm not recommending you do what I do, but that's why all these years I've been saying buy silver. And of course, has anybody bought silver? No, they hang on to that yen.
Oh, yeah. They love that paper dollar. It makes them feel rich when you can look at it in your bank account. Really, I think that's the allure of everything. Hey, I see how much money's in my bank account. It's absolutely doing nothing. First, you weren't getting any interest. Now you're getting a little interest that's still below the rate of inflation. So it's not helping anyone at all. And like I said, your education for people is so important, especially now with this AI and how much money's getting printed, that people really should start listening here.
And how many people would lose their jobs in a few more years? I mean, it's going to be massive.
About 25% of the building is completely empty. I just re-signed my lease for the same amount of money in my lease per square foot that I signed 8 years ago. They had to do that because any more people leave this building, the bank won't even refinance their loan going forward. So they're just forced into lower and lower lease rates. But that gives you some sort of an idea. 25% of a building in the middle of Los Angeles is completely empty and they can't fill it up.
Well, they're all moving to Arizona. That's why. I saw the light about 30 years ago when California tried to tax my worldwide income. And people don't know what that means because they don't have worldwide income. But if you're an entrepreneur, I have income coming from all over the world. So they wanted to take all of that. I said, adios. And we left.
Oh, sure. Hey, not only that, if you leave the state, they want to keep taxing you after you leave the state. So it's not a tax-friendly state at all.
We must be in sci-fi or someplace. We're in a bad movie, right, Kevin?
Oh, yeah, it is a bad movie. And this money printing is going to continue. And the government has no choice but to print money. There's absolutely no choice but to print money.
That's all they know how to do.
It's not only do they not know anything else to do, but I'll give you an example. We'll have a fun game here. I'll prove to people you can't stop printing money as the United States or basically any other country. So you and I live on an island and you're the banker because you're a smart guy and you have all the money and that money is 10 shells. So the whole island's money supply is these 10 shells. And I come to you and I said, Robert, I have this incredible entrepreneurial idea. You look at me and you say, that is unbelievable. I will loan you the 10 shells at 10% interest. I take those 10 shells, I spend it to start my business. At the end of the year, I get all 10 shells back and I come and I give them back to you and you put me out of business. Why? Because there isn't an 11th shell to pay you the interest. You as the banker have to print it up out of thin air so that I have the interest to pay you. That is what the government does in banking. They have to print more money. So that piece of paper that you keep holding up is absolutely worthless. It's going to get more and more worthless over time because you can't stop printing money.
Yes, right? But you should save money. Save money.
Every dollar they print, that shell just became worth less and less and less. People don't understand.
We're going to pay you 3% interest. Inflation is running at 6%. Can you do the math? Let's say I'm getting 3% interest, let's say, and it's running at 6% inflation. What's wrong with the math?
I'm happy I'm only going broke slowly. That's the problem with people.
I can't believe how effing stupid people are. I mean, I really mean that. We don't use those words here. CPI is consumer price, inflation, basically. Because, ladies and gentlemen, this is toilet paper. And it's becoming more and more toilet paper every single day. For full disclosure, I own gold mines and silver mines. And I own oil wells. I don't own any paper stocks. I just don't trust the government or I don't trust Wall Street. And I definitely don't trust the Federal Reserve Bank. If you have friends, family, cousins, or relatives, or that stupid neighbor down the street who's still saving trash, pull up this and discuss the subject of, is this money? Is this trash? Is this fake? And are you going broke saving money? Get together with friends and family and discuss it. Like I said, my family is, we're fourth generation Japanese, but we still act Japanese. We still save money. And I talk to my brothers and sisters and they think, well, I gotta save this. And I started this whole program to Kevin and said, would you save the yen? But that's what the Japanese are doing. And the Mexicans are saving pesos. The Europeans are saving euros and the U.S. are saving U.S. dollars. That's how stupid people are when it comes to money. And as I've always asked people, what does school teach you about money? Answer is nothing. And that was not a mistake.
1991, silver was about $3.75 an ounce, got down to $2.75 an ounce. That's when Warren Buffett purchased a bunch of, the silver. And then here we are at $25 an ounce. So got a pretty good run.
And I still say to people, I talk to everybody about gold and silver because I don't save dollars. When I have extra money, I buy gold and silver and I keep it in a vault far away from my home. I had a friend who stood on stage with me. He says, yeah, I buy gold and silver and I keep it in my home. I said, why don't you just invite everybody over? Idiot.
Yeah, right.
Never keep it at home, right?
I got some crazy stories. There was a guy that purchased a fair amount of gold and silver, and fairly wealthy guy, and goes on vacation and had a floor safe. And his kid showed his next door neighbor friend the floor safe. And when they came back, there was a jackhammer halfway through getting the safe out of the ground. And they called who rented the jackhammer. It was the kid. So yeah, I probably wouldn't keep it at home. There's all sorts of crazy stories that I could give about keeping it at home.
Go back to the story on the desert island with the shells. I mean, what happens after that?
You're on an island with these 10 shells and you loan me those 10 shells. There's only 10 shells. That's the money that was on the island. And you lend it to me with 10% interest. I can't pay you back unless you, the banker, prints up another shell for me so that I can get that shell. It's impossible for the government not to print more money each and every year. So if you think that dollar is going to become worth more, you would have to believe that the government's going to stop printing money. They stop printing money, the economy collapses, right?
Correct.
Paper money is going to get worth less and less. And I'm going to tell you something. I think the central banks have been listening to your program last year because the central banks last year purchased 25% of all the gold mined last year. Think about this. They can print money and take that printed money that they printed out of thin air, and they went and bought 25% of the 1,250 metric tons of gold central banks purchased. They don't even trust their own money.
No, of course not. And then recently, this is what people do not understand, is when the debt ceiling was at 30 trillion or some ungodly number. 1 trillion seconds is 32,000 years. Think about that. That's the debt they record. There's also off-balance sheet debt, which is estimated.
The off-balance sheet debt is almost twice as big as the on-balance sheet debt, because if you add it all together, we're at $100 trillion. So if you add the Social Security and pensions and Medicare and Medicaid and all the off-balance sheet liabilities, our debt is much, much bigger. However, as more and more people retire, that debt will start to becoming on-balance sheet debt because they're going to have to borrow the money to pay those people, and then it switches over to the other side of the equation. So it's a scary situation, and how far the dollar could fall if that happens.
And there's one more thing happens to Johannesburg, South Africa. The BRICS nations are meeting. BRICS stands for Brazil, Russia, India, China, South Africa.
What it means to me is that if they create this currency backed by gold, Robert, this will be the largest transfer of wealth between nations we will ever see in the history of money.
The BRICS were just 5 nations a while ago. They estimate by the time the meeting comes in, there may be 41 nations.
That's correct.
They're so pissed off that the United States ripping us off paying fake money. Even the BRICS nations are pissed off. But Americans? No, we have no idea. But the BRICS are pissed. And so they're going to join up and they're going to say, we're not going to take your piece of toilet paper anymore. What does that mean, Kevin?
Well, 2 things. I want to go back. Those 5 countries, if people don't understand who they are, you said it, Brazil, Russia, India, China, and South Africa. That's 40% of the population of the world. 3.2 billion people is 40% of the population. Just those 5 countries. You start adding in more countries. Where's the tipping point? You get to 50% or 60% of the people, the dollar's gone. But here's what it means to me with the transfer of wealth. Let's forget about the fact that there's a little bit of paper in this BRIC currency and we just use gold. Okay, I came from international banking, which you just asked me about, so I understand trade very well. The United States has almost last year a $960 billion trade deficit. If we were dealing just in gold, we were trading gold back and forth, I would have sent $960 billion extra dollars to a country that sent me toys, clothes, cars, everything that depreciates, and they ended up with almost $1 trillion worth of gold. So what happens to that currency? To have that currency, you need to back it by gold. That means there's going to be some gold demand, which probably pushes up the price of gold. It's backed by gold. It pushes up the value of that currency, and it pushes down the value of the dollar. So my deficit keeps getting bigger and bigger and bigger, and I keep throwing more and more gold over to them, and I have less. When it's paper dollars, nobody gets it. But you turn it into gold, or let's say I was trading real estate. Heck, the whole real estate market in the United States is worth $70 trillion. If I give $1 trillion to a different country of our real estate, that's 1.5% of our real estate. In 6 years, I've given 10% of our real estate away. That's what it means.
And they're going to sell a lot more Barbie dolls, from China. Yay.
Which will push up the trade deficit. Yeah, we paid $1 trillion extra for Barbie dolls, and we gave them gold for Barbie dolls. It's crazy. It will be the biggest transfer of wealth in the history of nations if this thing goes through. The dollar, I heard you say it, the dollar gets repatriated back into the United States, and inflation goes through the roof. Because paper means nothing. That gold-backed currency will be where everybody goes, including how we need to purchase that to now have trade with those other countries. We're basically purchasing gold and throwing it back to them.
Well, how much do you think Barbie doll will be worth next year? For you and I, that's how ridiculous it is. Same amount as the silver here. I'd rather have this, but they have the Barbie doll. How screwed up people are. People can say, I don't save cash because I use debt to buy real estate. So I use 100% debt financing. I don't recommend it. That's what I do. But when the cash comes in, I convert it to gold and silver, and it's stored as far away as Switzerland. I don't want anybody near my gold or silver. And I took a gold company public from Utah and an old silver mine in Argentina. So I'm pretty hardcore in this whole thing. Well, my question is for the person just starting out, if they have what's called an IRA, individual retirement account, I don't save cash. I save gold and silver, tangible, real. I don't have any paper gold or silver. I have no ETF. You can buy a silver ETF. It's under SLV, and gold ETF is GLV. That's paper gold and paper silver.
That would be like someone giving us a phone call and I said, hey, look, I'll sell you the gold and then I'm going to deliver 80% of it over to HSBC Bank in, Hong Kong or over in Great Britain. That's where it's going to be held, but it's not 100% in gold. Would you do it? Most people would say no. Okay, well then why are you doing GLD or SLV? You're not getting 100% backing of gold, and it's held somewhere else that you could never get a hold of it. I don't think anybody would really want to do that if they thought about it long enough.
Hypothecation means you buy this thing in a piece of paper, and they'll sell it 10 different times. They'll just keep selling the same piece of crap silver paper 10, 20, 30 times. So what happens if a person wants their money back at the same time, which is what might happen with the BRICS nation this year? There won't be any gold or silver there. That's the possibility.
It's a futures and options market.
They're selling gold and silver they don't have. I just want people to start saving gold and silver, not dollars, because they're going to print more and more and more of it as the debt gets bigger and the economy goes into a downturn. And as I said, my friend Jim Rickards, who also recommends gold, Jim Rickards is calling gold to go to 15,000 an ounce. Today it's about 2,000, so he's got a ways to go yet. But anyway, ladies and gentlemen, a lot of people who are in the know don't trust the dollar. They don't trust the Federal Reserve Bank. They don't trust the Treasury, and they don't trust Wall Street. If you do, keep saving this toilet paper. What does a school teacher know about money? Nothing. It's a game.
The whole system is in trouble. My biggest concern is that inflation is now systemic. And when Powell said it's transitory, that was a lie. When Biden took the Keystone XL pipeline offline, oil went from $30 a barrel to $120 a barrel. That was inflation, not the printing of money. And so this thing here became less valuable. And that's my concern. What I always say is not what the Fed's going to do, is what are you going to do? And so I always talk about the 4 Gs I've been investing in for most of my life. The first G is gold. And I stay away from the SLVs or the GLDs. I want no counterparty risk. I want the real stuff. The other thing I'm investing is ground. I own apartment houses. I'm glad I'm not in office buildings or commercial real estate. And then gasoline. Gasoline, the greenies hate the thing, but that's how we fly our planes and stuff like this. And then the last one is food. I invest in cattle and food. So I just stay in things that as inflation goes up, gold goes up, real estate goes up, gasoline goes up, and food goes up. So I invest with the inflation, not against it. Well, I'm a big advocate for financial education. So in the 1970s, when I got out of the Marine Corps, my rich dad had me take 2 things. I had to learn how to sell because sales equals income. And then I had to learn how to invest in real estate because real estate is debt. So most people say, live debt free. I had to learn to use debt as money. And as you guys know, in 71, Nixon took the dollar off the gold standard and the US dollar became debt. So I do almost everything opposite of what the pundits say. I'm not debt free. I use debt as money to acquire real estate, and that minimizes my taxes. That's what I do. I own equities of companies I've taken public. I've taken 2 companies public, one off the Vancouver Stock Exchange via an IPO, and the second on New York Stock Exchange via an IPO. I don't trust anything that can be printed. I like the hard stuff. I am a commodity guy. Well, real estate's dependent upon jobs, as you know. So I'm a little bit concerned about the number of layoffs coming in the tech industry. So I'd be very careful about jobs. I live in Phoenix, Arizona. That's why Taiwan Semiconductors moved here. So our job market is really strong. So the first thing I say to young people is I would take a real estate investment course. They don't cost very much. I love crises because when crises come in, prices are low. For example, after 2008, I borrowed $300 million to buy some of the best real estate in the world. I would take classes on real estate before you do it. The reason is real estate is not liquid. See, a stock is liquid. If I buy Apple and I don't like it, I can sell it that night. I buy a house or something, I'm stuck with it for a while. So I highly recommend more illiquid the investment, the more you have to be competent and study. I get into fights on YouTube with some of these real estate guys who are promoting what I consider very risky investment strategies, especially in real estate. I'll say it again. Real estate is illiquid. This is as liquid as it gets. Stocks are liquid, so you can get in and out. But the moment you go into real estate or you start a business, you're illiquid. And so the more illiquid the assets you're investing in, the smarter you've got to be. Definition of wealth is not how much money you have. If you stop working today, how long can you keep not working? For most people, it's a month, then it's gone. As I said, three things. I said, number one, the rich don't work for money. The rich work to acquire assets. Number two, savers are losers. Inflation and taxes are killing this thing. And number three, your house is not an asset. But the average person, they buy a house, they can't afford the mortgage. So instead of the house being an asset, the house is a liability.
So do you rent your own home?
No. But I have $15,000 to cover that one.
Right. And you think owning your own real estate is probably the best replacement, a real pension? Gold and silver.
But I have tons of it. This one won't make you rich. I think this thing is $35 today. I think in 2 years, it'll be $100.
Really? And that could have gone down 15 to 20% with inflation.
That's what I mean. Which would you rather have today? Most people choose that.
Key takeaway from Robert Kiyosaki. Paper money, whether it's dollars, yen, or euros, is losing value as governments continue to print more of it. It's like trying to fill a bucket with water when there's a hole in the bottom. The more they print, the less each dollar is worth. Robert argues persuasively that holding on to cash savings might actually be making us poorer when you factor in inflation and government monetary policies. What struck me was the contrast between traditional financial advice, save money, invest in stocks and bonds, and what's being suggested here, investing in tangible assets like gold, silver, real estate, and commodities. The speaker makes a compelling point that central banks themselves are buying gold in significant quantities, about 25% of all gold mined last year. If the institutions printing money are buying gold, that certainly tells us something. The discussion about the BRICS nations, Brazil, Russia, India, China, and South Africa, potentially creating a gold-backed currency, is particularly intriguing. This could represent one of the largest transfers of wealth between nations in history, potentially challenging the US dollar's dominance as the global reserve currency. There's also a practical element to the advice given. If you're going to invest in precious metals, store them securely, not at home. And be wary of paper versions of gold and silver, like ETFs, that might not be fully backed by physical metal. The speaker suggests that real wealth isn't about how much money you have, but rather how long you could sustain yourself if you stopped working today. The 4Gs investment strategy really resonated with me. Gold, ground, real estate, gasoline, energy, and grub food. These are all tangible assets that tend to retain value during inflationary periods. However, the speaker also emphasizes the importance of education before diving into investments, especially illiquid ones like real estate. This isn't your typical financial advice, but in a world of increasing economic uncertainty, maybe that's exactly what makes it worth considering. It's about thinking differently and understanding that traditional savings methods might need to be reconsidered in our current economic climate.